Hey there, I'm estate planning attorney Paul Rabelais, and in this video, I'm going to discuss the little known but most important decisions a married person needs to make when they want to leave an inheritance for their surviving spouse, but they don't want to leave those assets to end up in the hands of their stepchildren to the exclusion of their own children. So here's what I hear often. Paul, my wife and I are in our mid-60s. We got married about 10 years ago, and we each have 2 children. I have 2 children of my own, and she has 2 children of her own. I've accumulated, Paul, several $million of assets, and if I die before my wife, I really want and need to leave a significant portion of my estate for my wife because she'll need money to live off of, and who knows what kind of long-term care needs she may have. And while I get along with her 2 children, I certainly don't want to leave a bunch of assets to my wife, and then my surviving wife would turn around and leave those assets to her 2 children. I don't want anything going to my wife's children. I'd like to see my 2 children ultimately wind up with all of my estate that's left behind after me and my wife die. So the married person who puts little thought into this often makes a big mistake. Husband dies, leaving his $5 million estate to his wife because he loves his wife and wants to provide for her. But then after husband dies, wife, of course, decides to leave her estate to her children only, including the $5 million that she inherited from her husband, or what's left of it. Husband's children wind up with nothing. So it's common knowledge in the inner estate planning circles that when a married person is in a second or third marriage and each spouse has children of their own and a married person wants to provide for their spouse, it's common for that married person, as part of their estate planning, to leave all or part of their estate to a trust. The concept goes something like this. I'm going to leave all or part of my estate to a trust for my wife. My wife will be able to receive distributions from the trust, and when my surviving wife later dies, the remaining trust assets will revert back to my children. But you can't stop there. We've got to take a look at some of the decisions that you make when you do establish a trust like this for your spouse. First, let's analyze the decision regarding who will be the trustee of that trust after you die. Let's say you leave your estate, or $5 million, or whatever, to a trust for your spouse. And let's say that that trust says, as many trusts do, that the trustee is authorized to make distributions of trust principal or trust assets to your surviving spouse for their health, education, maintenance, and support, HEMS, the HIMSS standard. Now the trustee selection becomes really critical. And while each circumstance is different, if you name your spouse as the trustee of this trust, they're likely to be very liberal in making distributions to herself for her health, education, maintenance, and support, either because she wants to preserve all of her own assets for her children, or she wants to maximize the distributions from this trust, knowing that all those distributions she gets, she can leave all of that to her children when she dies. On the other hand, maybe you decide, I don't want my spouse to be the trustee of this trust when I die. Her children are going to convince her to take all of the assets out of the trust so that she can leave those assets to her children. So I think I'll designate one of my children as the trustee of this trust for my spouse after I die. And again, while each circumstance is different, it's likely that if you name one of your adult children as the trustee of this trust for your spouse when you die, that child/trustee is likely to be more conservative when using their discretion to make distributions to your surviving spouse for their health, education, maintenance, and support. So there are lots of trustee and co-trustee options, including whether you use one or more individual or corporate trustees that you must sort through when making this trustee decision. A second decision you'll make when setting up a trust to provide for your spouse and then have the assets revert back to your children at a later date is, when will my spouse be entitled to distributions from this trust? For starters, it's very common for someone who sets this up to provide that the surviving spouse gets all of the income that the trust generates every year. Let's say $3 million of assets are left in trust for the surviving spouse, and the surviving spouse is the sole income beneficiary of this trust. And let's say each year that $3 million produces $75,000 of income. If the surviving spouse is the income beneficiary, the trustee would distribute this trust income to the surviving spouse each year. So why would you want your spouse to be the income beneficiary? Well, for starters, you're probably okay at a minimum with your spouse getting this income while the principal is preserved. And another important point is if you leave assets in trust for your spouse and you provide that your spouse is the income beneficiary for your surviving spouse's lifetime, that arrangement qualifies for what's known as Q-tip treatment, which can be advantageous for estate tax planning purposes. Assets you leave to a Q-tip trust, again, your surviving spouse gets the income for life, allows those assets to be deducted from your gross estate before your net estate is determined for purposes of the 40% federal estate tax. So be very careful if you try to provide that your surviving spouse's right to income from this trust could terminate at a date prior to her death, like a remarriage, for example. And then another distributions decision, as I alluded to earlier, is under what circumstances will the surviving spouse be entitled to distributions of trust principal? Let's say your surviving spouse is the income beneficiary and is getting that $75,000 of income that the hypothetical $3 million trust produced. But at what point can the surviving spouse be entitled to portions of the $3 million of principal? Let's say your surviving spouse has long-term care needs of $15,000 per month and the trust income doesn't cover that. So when you set up your trust, you've got to decide under what terms would your surviving spouse be entitled to principal. And if these principal distributions are at the discretion of the trustee, then, as I said earlier, that decision of who will be the trustee becomes really important. So the bottom line here is if you want to provide for your spouse, as many married people do, but you don't want to ultimately leave an inheritance to your stepchildren to the exclusion of your children, then don't leave all or a significant portion of your estate outright to your spouse. Leave those assets in a trust for your spouse, but know that the two most important decisions you'll make are likely to be, number one, who will be the trustee of that trust after you pass away, and number two, under what circumstances will your spouse be entitled to distributions from the trust after you pass away. Knowing that assets that remain in the trust when your surviving spouse later dies will revert back to your children at the termination of the trust. Hope that helps.